Let's talk a little bit about gifting. So the IRS's definition of gifting is any transfer to an individual or entity, either directly or indirectly, when full consideration is not received in return. It's a lengthy definition, but you're basically, I'm giving money to my sister, and she doesn't give me any payment in return. That's considered a gift. An example would be cash. I could give my sister cash. Or I could give my sister stock, my Amazon stock that I own that's appreciated over the years. Not so much here more recently, but I could give her stock. I could give her an automobile, any type of property. If she doesn't give me anything in return, it's considered a gift. And it's up to the donor. I'm the donor in that example. I'm giving my sister a gift to know when, it's my responsibility to know when I'm subject to gift tax, if I have to pay gift tax or not. And it's my responsibility to file a gift tax return if it's required. It may not be required. And there's different rules for individuals versus entity gifts. I'm not going to get into the details on that, but the next slide speaks to more of the hard facts about giving assets. You can give an unlimited amount of gifts to your spouse. My wife and I could give my wife $1 million, $10, whatever I want. There's an unlimited amount of gifts to spouses. Gifts to non-spouse individuals. My sister, for example. If I give her less than the annual exclusion, in each year in most years that changes. For 2018, the annual exclusion is $15,000. So if I give my sister my Amazon stock or cash, let's use cash for example. I give my sister $10,000, that's below the annual exclusion of $15,000. I'm not required to file any forms or disclosures with the IRS. That $15,000 is from one individual to another individual. And again, that's called the annual exclusion for gifting. That's changed over the years. That tends to go up. It's now $15,000. If you were to give someone, a non-spouse individual, an amount over $15,000, that's above the annual exclusion, and you are required to file a gift tax return, or Form 709, IRS Form 709. One question I get a lot is, well, Brian, if I give my grandson $20,000, I got to pay gift tax on that gift. And in most cases, the answer is no, because each one of you here has what's called a lifetime exclusion amount, a lifetime amount of gifts that you can make. You have this annual exclusion of $15,000 to any one individual, but then you also have this lifetime amount that you can gift throughout your lifetime and at death. And that was recently changed through the Tax Cuts and Jobs Act to just over $11 million per individual. So let's say I give my sister $20,000. Yes, I have to file a gift tax return because it's over the annual exclusion of $15,000. And the amount over that annual exclusion in this scenario is $5,000. That would reduce my lifetime gift and tax exemption from $11,180,000 down to $11,175,000. I still have $11,175,000 of assets that I can gift throughout my lifetime. If you're married, it's double. Over $22 million of gifts can be made throughout you and your spouse's lifetime and not have to pay gift tax.
Per person?
$11 million per person. The question is per person. So,
Can I give him and her each $11 million?
no, it's, yeah. You can give him $15,000 and her $15,000, but you can't give him 11 million and her 11 million. One strategy you could deploy though is if you're married, you give him 11 million and your wife gives her 11 million. But go ahead, another question.
But that's capped. Something, there's a year when that ends, correct?
2026. In 2026, as of right now, this lifetime exclusion, this lifetime gift tax exemption, reverts back to just over $5 million per individual. It was recently doubled, but through 2026. Am I correct on that, Josh? Okay. So if Congress doesn't do anything, which we know they're pretty good at doing nothing, especially with the divided Congress right now, it's most likely that will revert back to just over $5 million. It's indexed, it grows every year, slightly. The last bullet point, I think this is really important. Medical expenses or tuition paid directly to the medical or educational institution on behalf of someone else is not subject to gift tax. So let's say I have a grandson who got in a bad accident and he has $100,000 in medical bills. I, as his grandfather, could give $100,000 or pay the $100,000 of medical bills. If I do that directly to the medical institution, that's not subject to gift tax. It's considered a gift, right? My grandson didn't give me anything in return other than his love and time. But if you pay it directly to the medical institution, it's not considered a gift. Same goes for tuition payments. If you pay directly to the university or the educational institution, and it's any amount, it's not considered a gift, and therefore not subject to any gift tax.
Brian, you have a question down here.
Question, go ahead.
And anything over the 15 is taxable to the recipient?
Good question. The question is, any gift over $15,000 is taxable to the recipient? The answer is no. If I give someone more than $15,000, I may have to file a gift tax return, but I can use that lifetime amount of over $11 million and not pay any gift tax. Just because I have to file a gift tax return doesn't mean I have to pay tax on that gift. And generally, it's the donor who gives the money that is subject to paying any gift tax if you owe gift tax. Does that answer your question?
I'll chime in with the exception, of course. It depends on the character of the gift. If you gift someone appreciated property, securities, they are going to inherit your cost basis. So they would pay the capital gain on the sale of that asset. So if you're giving cash, right, so one of the concepts is give charities, right, appreciated securities, give your kids cash, right?
Is there a maximum of cash?
No, I mean up to the exclusion amounts.
So they're receiving
No.
tax.
From tax. Now, I guess there are some states that might have a inheritance or gift tax, but Ohio's not one of them.
Thanks, Josh.
Yeah, question is, on that amount of money paid to the hospital or whatever, does that become a deduction to the pay?
The question is, if you pay for your grandson's medical expenses, can you also get a deduction for that? If I don't know the answer, Marv. It's a good question. I will follow up with you on whether or not you would get a deduction for that expense. I don't believe so, but let me double check. Christina, can I put you on the spot?
Yeah, it's not your liability. Just like if you pay, so you're not on hook for it. Just like if you, I have a client whose daughter bought the mother's house, but the mother still pays the real estate tax. She can't get the deduction. It's not her liability. So it's not your obligation to pay that. You were just kind enough to do so.
bottom line, if you pay for someone else's medical expenses directly to the medical institution, you personally don't get a deduction for that.
Is there one anywhere in that area?
Does anyone else get a deduction for it? It depends on the situation.
Or gift the money to the parents, let the parents pay it, let the parents take the deduction if it meets the threshold for, I find it.
Right.
That way.
Medical expenses above a certain threshold of your income can be deductible as an itemized deduction. That's a more accurate answer. So it depends on whether or not someone can get a deduction for that based on their situation. But there is no deduction for the person that pays for medical expenses for another person and another person's liability. Let's go to the next slide. Not all gifts are subject to gift tax. Those include gifts to charities. I can give money to a charity and not be subject to gift tax. And you can give money to a political organization, not be subject to gift tax. Gifts to charity are possibly deductible in the year the gift is completed. Again, if you give money to a charity, it's a charitable contribution, which is a type of itemized deduction. So you might benefit from that if you itemize your deductions. Again, charitable gifts. If you give money to a charity, it is a deduction, but you're only benefiting from that if you itemize your deductions. Why would you itemize your deductions? If they're greater than your standard deduction. What's your standard deduction? $12,000 as an individual, $24,000 as a married couple. Are your itemized deductions above that threshold? Depending on the type of gift that you make, there are limitations. AGI limits, your adjusted gross income limits by the character of the gift. If I make $100,000 in my AGI, for example, my AGI is $100,000, and I give all $100,000 to a charity, I only can deduct up to 60% of my AGI for that cash gift, up to 60%. Again, these limits, I mean, it depends how charitably inclined you are, but there, again, are limits on the deduction that you get for certain gifts. 60% on cash, 30% on appreciated property subject to capital gains, 20% on appreciated property subject to ordinary income. Appreciated property subject to capital gains would be a stock. If I gift a stock to a charity, what is the market value of that stock at the time of the gift? There's a limit on how much you can get a deduction for on that gift of stock. And that limit is 30% of my AGI, 30% of my adjusted gross income. I'm charitably inclined, but I'm most likely not going to hit that threshold of 30% of my AGI. But maybe some of you might. 20% threshold for property subject to ordinary income, that's like collectibles, artwork. A really nice automobile that's a collector's item. Those are appreciated types of property subject to ordinary income. If you have charitable deductions that are not used in that current year, you can carry those forward for 5 years. I'm going to pause here and see what questions come to mind about charitable deductions. If you do have questions and you don't ask them today, feel free to ask during the meeting that you have with your financial advisor. I'm happy to join any of those meetings to offer some clarity. Question?
All right, so if you reached your 24 and you realized with my charity, I'm under that. So you can set aside your $5,000 annual gift for 5 years, and then in 5 years you deduct the whole thing?
Correct.